Hi, everyone, and welcome. Thank you so much for being here for day 2 of Third Decade's annual Alumni Week. We have a really special presentation for you all tonight. Many of our participants want to make an impact with their money, but they don't know where to start. And that's why I'm especially excited for tonight's topic, which is financial activism, spending, banking, and investing with purpose. We're excited to explore how our everyday money choices can be powerful tools for change. And the great thing is you don't have to overhaul everything to start making a difference. So tonight's conversation is about those small, meaningful steps that help align your money with your values. We are lucky to be joined by somebody who embodies this work every day, Diana Giselle Yanez. Diana wears many hats. She is a money coach at All the Colors, a wealth manager at Natural Investments, and the host of the Highly Sensitive Money podcast. In her coaching practice, Diana helps women of color entrepreneurs build sustainable financial systems that support not just their own lives, but also their families and communities. And through Natural Investments, she helps impact investors put their money where their values are. She is a certified financial planner, registered life planner, and has completed the compassionate inquiry training to facilitate her work in a trauma-informed and empathetic way. So at the end of tonight's webinar, we will have some time set aside to address questions from the Q&A, so please be sure to share your questions there for a chance to have them addressed live at the end. And we hope you all get a lot out of tonight's session. Welcome, Diana. Thank you so much for joining us.
Thank you, Nikita, for the invitation. It's a pleasure to be here, and I'm happy to see that we have many participants here who are watching. So today we're going to be talking about financial activism, right? Spending, banking, and investing with purpose. And I love hearing from people in the chat. So let me know, what have you tried? What is it that comes to mind when you hear these terms? So many of us want to use money in a way that aligns with our values, but many of us aren't sure where to start, or we're fearful about the uncertainty of investing only in ESG, which is environmental sustainability and governance screening. But there isn't only one way to practice financial activism. And thank you, Nikita, for the introduction into myself. Like Nikita said, I'm a money coach, an investment manager, and also a podcast host. I wear a couple of different hats, but really my focus is on helping people bring their values and their money, to align their values and their money. And in today's workshop, we're going to be covering 3 main things. What is financial activism? How do we get started in the domains of spending, banking, investing? And what are tools that are available so that we can keep going? Again, as Nikita said, you can drop the questions into the Q&A. And as we're going through this, if you want to share anything that's not a question, you can go ahead and share it in the chat. I'll be monitoring that. And I want to read what someone just put in. My current strides toward financial activism are canceling Spotify and avoiding Amazon wherever possible, moving over to a credit union, spending with local businesses that I want to see thrive. Right, that's beautiful. And I've done a lot of these things myself too. I see we have something in the Q&A. This is good. Oh, the chat is disabled, Lacey. I don't know if you can change that. If not, then we'll just stick with the Q&A moving forward.
I'll go ahead and adjust it right now.
Thank you, Nikita. Oh, another thing that I wanted to say about here, we're going to be going through a lot of different material. And it's pretty common that when we're talking about investing or anything really related to money, it can be a lot to take in. Just remember that this is being recorded, so you can come back and watch it later at your leisure. If there's a specific part where you're like, I need to hear that again, you'll have access to it. So relax and take in what you can. Again, we will have a Q&A towards the end, and one of the things that I'll remind people of that I'll mention right now is that I also offer like one-to-one free 30-minute coaching sessions for anyone. Just as if you have like a particular question around something and you want to do it one-on-one, we can go into that. So first, let's go into what is financial activism. If somebody wants to put in their definition in the chat, I would love to hear it. But activism in general is the policy or action of using vigorous campaigning to bring about political or social change, right? Activism seeking social transformation. And when we're focusing specifically on money, we've got to remember that our dollar is our vote. How we earn, save, spend, and invest give speaks to what we value. Okay. So let's go. If I'm hearing no comments, I'm going to go into the spending section of this. I love what Lacey just mentioned in the chat, right? That spending with local businesses is a way to have financial activism to focus in on what you want to see thrive. And okay, I see something. Okay. And sorry, I'm like monitoring the different ones, and I think I'm going to shut them so that I'm not distracted. I love what Lacey said about shopping local. We can also consider free trade, right? How do we purchase in a way that is, for example, you can think of coffee and chocolate, right? Making sure that you're not using brands that use like sweatshops, that kind of thing. There's also like reusing, reducing, recycling, kind of using what we already have. I remember hearing that fast fashion is one of the top pollutants. There's piles and piles and piles of clothes from brands like Forever 21, brands that are very disposable in Chile. Like I remember seeing a photo of this of just like mountains of discarded clothing, right? And I want to focus in on what the benefit is of spending local. Here, it shows that for every $100 spent that are local in the community, you'll see $52 of it actually stay in the community, right? So if you can see in this photo right here, because you've got local supplies, local businesses, local taxes, wages, community donations. There's so many lines of like how this money is reused back into the community, and $47 of it is going towards supplies outside of the community, right? So there is there is interaction with the outside community. However, when you look at big businesses, like any kind of big box, big chain business, only $13.60 stay in the community. It's a huge, huge difference because 86 of it is going to outside business services, outside supplies, outside imports, right? And this is coming in from Civic Economics, and I believe this is from 2019, so it's relatively recent. And I love what someone wrote into the chat, giving to community collectives instead of giant nonprofits, right? So focusing in even your giving into the local sphere. Nikita, I love the Buy Nothing project. It's been really useful. I think whenever anyone's moving, you have so many things that you're like, what am I going to do with all of these things that I'm not really sure that I want to move with me? The Buy Nothing Project is a perfect place to just kind of redistribute it amongst your community. Getting animal products from ethical sources, definitely when you think of like how are things tested. So our dollars do have a lot of say, they have a lot of impact. Okay, I'm going to move into banking. And here in banking, I want to talk about what's called the dollar multiplier effect. So when you deposit, let's say you deposit $100 into a bank, the bank is required to keep 10% of that, so $10 out of the 100 in its vault, right? It needs to keep 10% as a reserve. The other $90 can be used to finance whatever it is that they see fit. A lot of credit unions will finance local projects. A lot of other banks, like very many multinational banks, are going to finance whatever is most profitable. So what this means is that when you think about changing where you bank, every dollar you move is equivalent to moving $10 from the bank, right? Because there's $1 that stays at the bank and 9 are loaned out. So if you move the 10, they're losing actually access to 10, right? They're losing access to 100. So it's 10 times more. Your money moves have significant leverage. And I want to share what's called the Dirty Dozen page. And this is looking at climate chaos because a lot of one of the big banks will not only finance, here, let me scroll to the top. Banks are not only going to invest in like direct oil deposits, they're also going to invest in like what are all the costs associated with extracting the oil, right? All of the machinery, all of the labor, all of the different laws that they have to follow. And this is the list so this is of 2024, and it's looking at what banks are contributing the most towards fossil fuels, right? And fossil fuels is oil, anything that we're taking from the planet. So the top one is JP Morgan, Citigroup, Bank of America. Let's see if I can zoom out a little bit so we can see all 12. And this resource is called Banking on Climate Chaos. And you can see how this has been changing over time. So Mitsubishi and Mitsuho are Japanese. Wells Fargo, the top three are from the US. We've got Canada. SMBC, I believe, is German. So you can see the big portion of this is coming out of the US, and you can see over time how this has grown, right? This is lending and underwriting to the fossil fuel sector. So if you are currently banking at one of these and decide to move, it's not only like the $100 that you move, it's the multiplier effect of basically 1,000, right? So it's 10 times more effective. And I think on my next slide, I have resources on like what banks could you move to? What other places are available that really focus? And here I'm focusing on climate justice. When we think about financial activism, it's both environmental and social justice. Just kind of zooming back, when I was talking about spending, we were talking a lot about social justice around the economics of local economies, of local spending. Here with banking, a lot of the focus is more on, is it contributing towards fossil fuel or not? And I hear that some people here are already in love with amalgamated banks. So there's some recognition of these banks. And this is a spreadsheet that was created by Invest for Better. I'm going to be mentioning that nonprofit later on. They're a great resource. And here, they're just kind of doing a comparison. What are the different banks that really are very clear about not wanting to invest in fossil fuels, right? That they have a positive environmental impact lending. We see Amalgamated at 39% of the loans focused on climate protection. Clean Energy Credit Union is 100%. Climate First Bank is 30% of loans, and Beneficial Bank are 75% for people and planet. So that's a little broader. And a lot of the times, loans are really like business loans. I think for Clean Energy Credit Union, there's a big focus on lending to people as they're setting up solar panels, right? So that's like a very focused green project. And also what's really important is that how easy is it to use it online, right? What ATM networks are available? And you have some of the fees here. I want to make a plug for Climate First Bank because they have the highest. So you're here at 4%. And this might need to be reviewed again. So this might be like 3.5% given where interest rates are moving. But at 4%, Climate First Bank has the highest yield for a savings account, right? The rest of them are much lower. So this is something just to compare, that if anyone is using an online bank, online only bank because they have the best yield, you can also find that in a place that is focused on climate activism. Okay. So just as a recap, for banking, a big focus is on environmental care. For when we're thinking about local spending, a lot of it is like, how are we creating jobs for our community? I'll share a story of myself. When I was growing up, my parents had a small store at a flea market, a swap meet. And I remember when Walmart came to my town, our town had like 30,000 people, 35,000 people. I remember I must have been like 11 years old, and my dad was giving me a lesson on capitalism. And he told me, you know how at Walmart, there's one greeter? Here at the flea market, we have, for every store, there's a greeter. So there's 50 greeters here. So by Walmart coming in, they're removing 49 jobs, right? If they're replacing all of these small businesses, they're immediately replacing a lot of jobs. And I remember that really sticking to me, and I'm hearing, yeah, capitalism. I know it's really not working for us, and we're figuring out ways to make it different, right? But just to remember how when we move away from the big box stores, and I don't want to say so much about Walmart because I know they've done a lot of things to like pay their employees better. Like they have actually done some work to move further ahead in their processes compared to like some of the other big box stores that I know of. I don't really want to like call out one versus the other. I just remember this was a very specific example that I received as a child. So we've talked about spending, we've talked about banking. Now we're going to talk about investing, and investing is probably going to be like a good 30 minutes. So as you have questions, drop them into the Q&A. If you have comments, drop them into the chat. I am monitoring that. Next, I'm going to show you a chart that it has a lot of different moving parts to it. But really what I want you to focus on here is that it's a gradient. It's coming from traditional investing, where you're only focusing on return, to the other extreme, which is traditional philanthropy, where you're giving the money away. right? And as investors, we're probably somewhere in the middle with our money. Maybe some of our money can be giving away, and some of our money is only focusing on returns. However, as you become a financial activist, you can move more and more into the middle, right? So traditional investing is return only, limited or no regard for environmental or social justice considerations. Philanthropy, really, the financial return is prohibited, right? There's really not supposed to be a return when you're giving it away, and you're focusing on maximizing impact. So you're supporting activities that don't have a business model. And in the middle, we have market rate return, which is what most of us have access to in our retirement accounts. You can do some financial activism in there with like negative screening. So negative screening is, I saw it in one of the questions prior to this, but like prison-free funds, right? Not investing in anything that has to do with prisons. That's negative screening, right? Removing oils, chemicals, moving away from anything that has to do with deforestation. The positive tilt is focusing on companies that are creating change, right? One of the ways to think of companies that are creating change is the B Corporation. They're called benefit corporations, and they have what's called a triple bottom line. Their bottom line is, yes, profit. They want to be a profitable business. Their business is not nonprofits. It's also the people, right? How are their employees provided for? How are they protected? What is how is the community affected by their work? And also planet. So it's profits, people, and planet. And planet is, what is their environmental footprint? Are they at least removing any of the harms of their business, or making their business or making the planet around them better? So that's what we would call positive tilt. Companies that proactively incorporate environmental sustainability and governance practices into their work. And then there's what's called possible adjusted return. This might be more of a focus where you're willing to give away some of the return in exchange for positive impact. So return only, if we're thinking of someone who is invested 80% into stocks, right? So a big focus into stocks because this is their retirement account. They might be expecting returns, and it's only return only, not adjusted at all. They might be expecting returns of like this year, it's been about 14%. Last year it was 10, the year before it might have been lower, but this year's been pretty strong at 14%. Market rate return, you might have some negative screening and still be able to make that 14%, 13%. Possible adjusted return, here you might be focusing more on impact than return. So you might say, I don't really need that full 14%. I would be fine with 6. So I am willing to do things that are more focused on positive impact than on returns. And this is where my work at Natural Investments is really focused, and it may not be within the scope of what everyone here is focusing on, but I just want to let you know that it's possible. For example, at Natural Investments, we do a lot of what's called private investing. So one of my favorite examples is in the East Bay in Oakland area in Northern California. They have the East Bay Permanent Real Estate Cooperative. And what that organization has done, it's a nonprofit, in order to to push back on gentrification, they have purchased a building and are selling it back to the people who live there as a cooperative, as a co-op. So it's jointly owned by the people who live there as opposed to by an outside investor. And they're really focusing on making sure that that it's accessible, that the price makes sure that there's like a wide range of people who are able to live there, right? And they're making it permanent. So they want to have like a source of a stability for the community. And there, the adjusted return might be much lower. It might even be below market. So for example, if your savings account can give you 4%, East Bay Permanent Real Estate might be giving you like 2% or 3%. So you might actually be losing out to inflation. However, sometimes that happens. I know that one of the questions was like, what if you have a settlement? What if you sell your business? What if you receive an inheritance? Sometimes it happens that people have more money than they need. And it's a complicated phrase that I just said, but they may have more, and they might say, you know what, 10% of this, it's okay if I'm not making any money on it, but I'm not losing the access to the capital. So maybe if you have whatever the amount is, right? And you're like, if this portion doesn't grow, I'm going to be okay because I've looked at what other portions of my account are growing. This is just like a little bit example of like what can be done in the economy that's in financial activism that's like more extreme, right? So that's really what I'm describing here is concessionary, willing to forgo return for increased impact. Investors accept below market returns. And here they call a DAF. So that's a donor advised fund. People can donate into a donor advised fund and invest. You can invest the money that you don't need into this in a way that's really more focused on impact than return. So this is the broad overlay of what's possible as a financial activist in your investing, right? You can do market rate returns, possible adjusted returns. How do we implement this? Now that we know what the universe is, how do we actually put this into practice? There's a couple of different ways, and I've listed on here a lot of different resources. As employees, a lot of the times we don't have a lot of say over what to put into what we can invest in our retirement accounts. That's the place where most people are investing. I do want to call out, there's this organization called Just Futures. They're a public benefit corporation, and Just Futures focuses on screening out the bad, screening out fossil fuels. I don't know if they screen out private prisons, but they do focus on like removing the bad and focusing in on possible solutions, right? Especially around environmental care and looking at governance. So this is something that maybe you can ask your employer to bring into that option, right? They would facilitate that. If you're investing outside of retirement accounts, a couple of different resources are Invest for Better, Invest Your Values, Natural Investments, and I'm going to start to bring up those links. So Invest for Better is the nonprofit that I mentioned. They do, and I used a couple of their slides earlier, but they provide 6-week classes for people wanting to become more informed around investing. They focus on women, so it's a women-only nonprofit. What's really great about it is that you're doing this in cohorts. So the cohorts are between 12 to 18 people. So as you're going through these different lessons, you have someone there that you can bounce questions off of. I've led some of their panels before. They're a really wonderful organization. For investor values, I want to show a couple of different examples. So here, their first screen is like your retirement savings may be fueling the climate crisis, but they don't have to. And you can look if you're at any of these employers, how does Chipotle compare given fossil fuels and social scorecard, right? So you can kind of see like where are these large companies on the scale of financial activism versus financial status quo. And specifically, I want to show a comparison. And Nikita, stop me if I'm like going a little bit too in depth, but I believe that everyone that's an alumni at third decade has already done some of this work of like learning what these stocks mean and what the expense ratios are.
There's a small amount of understanding around ticker symbols. We oftentimes keep things simple. We talk about index funds, but many of our participants have heard us talk about Vanguard, and I think it's perfectly fine to show a comparison between different funds.
Okay, thank you. So here I'm going to be using Vanguard, and I'll be using, and this is an index, right? So this is a total market index, the entire market, and this is one that's screened for ESG. So it's, again, ESG is environmental, sustainability, and governance. And I'm comparing it to ClearBridge Large Cap. As I scroll down, all three of them, the fund group, all of them are large cap equity. They've been started around different times, right? So Vanguard, the first one was started in 92, 2018, 2017. We can see what their net assets is, like how much money they're managing, and also their expense ratio. I want people to note that the expense ratio does go up as you move towards more screening because it takes more work to actually go through a list of holdings and make sure that they're following what you would expect them to do, that they're following the screening guidelines, right, for ESG. And something else. Okay, so another thing is the number of holdings. The number of holdings in Vanguard is 3,529. So that means 3,529 different companies versus the next one at 1,331 and the last one at only 27 countries. So the companies, this is a lot more concentrated, which again explains part of the expense ratio that they're having to go in and find the companies that are really going to be following their ESG guidelines. And they're all invested in stocks. So these are all pretty comparable. And I'm going to show you two different portions to compare. First is what is their rating when it comes to the environment and to social justice. And then at the bottom, we're gonna compare what their return is, right? Because at the end of the day, if we're investing in this, we do hope for there to be a return for us to reach our own financial goals. And in order to get to this page, you would come to Invest Your Values, over to the menu, Mutual Funds and ETFs. And here you can start to kind of plug in different companies that you wanna review. I kind of had this preset just so that we can dive right into it. So let's come and see. How do these three companies compare? In fossil fuels, ClearBridge has an A, right? Like they're clearly trying to make sure that they're not investing anything that has to do with coal, oil, or gas, energy, or utility companies. And what I like about this is that you can, I guess not here, but a lot of the times if you come strictly to their profile, oh
It
no, it's
looks like
not.
it's downloading it in the upper right of the
I
Chrome.
know, it's not working the way that it was working earlier, because I wanted to show you, like, what does the D mean? So I'm going to VTSIX. I'm gonna have to do it the manual way, which is probably good for everyone. Oh, you know what? I think it's actually not working. Great, as you sow on the day of the presentation.
I'm so sorry.
Well, today it's malfunctioning, but we can still see what the comparison is here. And I can tell you from memory, what this usually means is that it's a comparison. It's grading on a curve. So a D means that compared to other companies like it, it's doing worse, right? And it often will tell you like it's because it holds 23% or 23 holdings are focused on fossil fuels. So it'll give you really good detail. I'm not sure why it's malfunctioning today, but overall you can see that Vanguard Total Stock Market is not doing well. And on the deforestation end, they have a C, but overall, they're not doing well. When we come over to their ESG, they're not investing in fossil fuels directly or fossil insurance, but they are investing a lot in fossil finance. When we come to gender equity, the way that they look at this here, gender equality, it's what does the C board look like? What is the C-suite, the corporate executives? Is there female representation? They also look at how many settlements have been made outside of the company for sexual harassment, right? So if they're paying people off instead of going into any kind of criminal suit, that's how they will get this D. Military weapons, investments in military arms, manufacturers and service companies. Here, ClearBridge is not doing as well, right? And sometimes when you look at this, for example, one of the companies that always surprises me is like Texas Tech calculators, the calculators that as a financial planner, they give me like the time value of money or that anyone involved in statistics. Texas Tech does have a component of their business that's focused on military weapons. So if a index is investing in Texas Tech, they may get a lower grade because of it. And sometimes there's like it can get really complicated, right? Because like how do you define whether someone is following these guidelines or not? Texas Tech might say, 5% of our revenue is related to the military. For some organizations, 5% might be, well, that's below their cutoff. So they're going to say it's not investing in the military, but for other organizations, they have a zero tolerance policy. So it's just going to be, it takes a little bit of digging to like really become versed in financial activism, and yet it's possible. One thing I always remind people of when we're starting this process is that you only really have to do it once. It's a big deep dive, and then afterwards you're kind of checking, right? It's kind of like, that's an example of this. If you're deciding that you're no longer going to use toxic cleaning products, right? And you have all of these old cleaning products at your home that you're like, well, these I don't really want to use because I have a child or whatever reason. It turns out I'm allergic. And you have all of this stuff that you're just going to have to throw away or give away because it's not going to be serving you. And you have to make a big investment into all of the new cleaning products. But after that first initial big investment, it's much easier to continue. right? It's the same thing when it comes to revamping your investments. So now for the last part, which is performance overview, how do all of these compare? If you look at the last month, VTSIX, the total market has done 2.28 versus 2.3 for the one that's environmentally screened versus 11, like almost flat for the one that's large cap, for the one with the clear bridge, right? The one that is most social justice oriented, environment sustained oriented. But as you move further out, you can see that that changes. It starts to catch up around the 1 year return. On the 3 year return, it's actually doing better. At the 5 year returns, it's doing a little less. So it is a little, maybe it's a little more concessionary, but I look at this comparison pretty often, probably like once a month, depending on where I'm giving presentations. And these numbers really change. I think I've come here and like all of the numbers have been par. Sometimes the ClearBridge large cap is leading. Sometimes the ESG one is leading. It just depends on how the market has done. So it's not steady, but you can see that it's not like this is 18% and this is 2%, right? It's kind of keeping up in pace. Although this year ESG has lag, which I wonder if that has to do with policy considerations, right? As we're seeing the US government be less focused on climate care, that might be what's affecting this. But again, it's hard to know exactly what's making this change. What we can say is that with diversification, you would want to, yeah, so here it is compared to the benchmark. And it's comparing, all of them are being compared to the same benchmark. So this benchmark is doing better than all of them in 1 year, right? All of them are doing less well than the S&P 500. But in the 3 years, they're doing better. In the 5 years, they're flat. What that means is that the S&P 500 is only 500 companies, whereas the Vanguard stock is 3,500. The ESG one is about 1,300, and this one is at 27. So they're comparing it to the 500 largest, or what the S&P 500 is tracking. And they're all kind of moving in the same direction. Okay, so this is a very deep overview into like how you can start to compare your different organizations. I'm going to take us to natural investments, heart rating. This one I have to look up. I didn't. So the heart rating, this is the company where I work, and since 1992, they've been reviewing all of the different, not all of the different, or many of the different ETFs. So you won't find Vanguard in here, but you will find other places. So if you look at how you want to invest your portfolio, and this is outside of retirement accounts. Sometimes in retirement accounts, what you have is what you are able to invest in. But if it's outside and you say, I want to have a small cap fund, right? Something that's small, that's focusing on smaller companies. You could come here, look at equity, because we're looking at small capitalization on the equity section, and see the funds that are available here. And it's showing you 10 different entries. And you can go through here and see which of these am I interested in investing in. If you click on here, it'll take you directly to the site. But overall heart rating means it's looking at these three things. Community investing is kind of like what I was sharing earlier about East Bay Permanent Real Estate Cooperative. Like, how is it investing? How is it creating a different form of ownership, right? Outside of capitalism. Shareholder advocacy, that example that I shared earlier on Texas Tech calculators, I heard about that because we were doing shareholder advocacy, that we were asking Texas Tech to stick to calculators, to move away from military. So this is where you can see whether the mutual fund managers are actually engaging in activism with their local companies. I heard today that, actually I will go into it, but and then also ESG screening, right? How closely are they sticking to this? And there were a couple of questions that came in before that I wanted to include here. Are Carbon Collective and Earth Folios, those are more, those are places where you're hiring an algorithm to come and do the investment management. When I was going through what it means to do and compare, like what you do here versus what we do at Heart Ratings, this is really where I focus, right? I use sometimes the metaphor of the difference between going to a baker and then buying bread. So kind of doing this kind of thing is you baking your own recipes, baking your own investing. Whereas coming to Carbon Collective or Earth Folios is going to someone and buying bread. And Carbon Collective, from my research on them, they are focusing really on the environment. They haven't, both of these are more environment focused than they are social justice focused. And they have different fee structures. So you'll invest, let's say you invest $1,000 with them. Depending on their fee structures, they'll charge you, I think Carbon Earth Folios is charging 0.5%. So out of every $100, they'll charge you 50 cents. Carbon Collective has a little bit more of a graduated scale. So they'll probably charge a little more than Earth Folio for $1,000. And compare that to what I charge as an investment advisor. For $1,000, I would charge 1.35%, so $1.35. Right. So it's the rate is like at least twice as much, which is why people will often go to an algorithm. What an investment advisor can bring to you is much more in-depth of making sure that if you, for example, we have some clients that didn't want to invest in occupied territory, so nothing that had to do with the Israeli-Palestinian conflict. And that takes a lot of screening. It takes a lot of work. And that's part of what you can have an investment advisor do. I also heard a question about prison-free funds. Let me bring that up. And it's also related to investor values. Great. And here you can see whether I'm going to put in VSTAX. That's the one we were just looking at with Vanguard. VTSAX. And we can see what their rating is, right? And this is kind of what I was trying to dig into earlier. Prison-free funds will tell you like 38 out of the 3,500 companies are invested in the prison industry, 44 of them, and there may be some overlap, are in the border industry. And in order to have a higher score, you would want to have, so they 2% of their assets are higher risk. Okay, so it's a little bit, but yeah. And here it's where it can get really complicated, because if you look at Microsoft is one of the companies that's using prison and border industry labor. It can also be a really hard company to boycott, right? But it is possible to find mutual funds that are boycotting these. So I heartily recommend Prison Free Funds. It's related to Investor Values, which is a nonprofit. And this is like some of the information that you find here. The largest private prison operators are Core Civic and the Geo Group, right? This is where you can kind of look at that information. So available resources as you're learning or as you're deciding, like, how do you bring activism into your own investments outside of retirement accounts? The resources that I recommend are getting training, right? Through a place like Invest for Better. Looking at resources that are investor values, which Prison Free Funds is connected to it. Looking at what Natural Investments has also created. And lastly, you can outsource some of this work. If you're like, I actually don't have the bandwidth to do this deep dive, but I will trust that Carbon Collective and Earth Folio are doing the deep dive, and I'm willing to pay them for that amount. Because you can also find there are alternatives to both of these that are called like algorithms robo advisors that charge a lower fee, but they don't take the time to screen. Right? It's a similar thing of when we decide to purchase free trade coffee versus regular coffee. Sometimes there's an additional cost because you're going through a larger process to make this happen. Oh,
I have just a couple of questions here on the side I'd love to share if now is an okay time to dive into a little bit of Q&A.
yeah, please.
Okay, awesome. So, what advice do you have for somebody who wants to start conversations about money and activism within their own circles, such as with family, friends, or the workplace, without it feeling uncomfortable or polarizing?
I would invite the person to figure out for themselves, like, where do I feel the most comfortable talking about this? Right? Let's say that you look at your retirement accounts and you're actually really happy with what your employer has. There's a couple of different funds on there that you want to invest your values, you screen them, and you're really excited about them. You could start there. You could tell your family member, your friend, hey, I looked at these retirement accounts. Turns out these investments are really aligned. Or you could talking about our own journey often will invite questions from other people. For example, if you're moving away from a big bank into a smaller credit union, something like that, you could share your experience. Like, it was a bit of a hassle, but I called someone and they really helped me make it easy. And I don't miss the big bank at all. Those kind of things, right? Starting with our own personal experience is often the place because as a coach, as an investment advisor, it takes me a few hours to find out where people are in their own situation before I give them advice. When someone just comes up to someone and says, like, here's the things I think you should do, we just kind of shut down,
Yeah, yeah, that's
right?
true.
Yeah. So stick not don't move into advice giving too quickly.
Great. That's a great point. If you were to do only one thing of all the different ways you can practice financial activism in your life, if you're feeling a little limited, maybe you don't have a ton of money to invest, but you could only do one thing, what do you feel like is like maybe in your opinion the most important thing you could do?
Moving banks is really, really effective. It's
Okay.
really effective. It can make for every dollar that you move, you're actually moving 10, right? So that's a really big leverage point.
When you and I were talking about this early on, you're the reason why I'm moving to a credit union soon. Is I'm just gearing up, but yeah, I really didn't realize just how much your money funds like the bad things in the world, and it's a one small but big way to protest. So I'm glad you mentioned that. Could you talk a little bit about greenwashing? I think it's a term a lot of people have heard. Maybe go into that a little bit and how we can kind of look out for ourselves, not be caught in the trap of greenwashing.
Yes, yes, definitely. Organizations like Invest Your Values, the one that I was like looking at for private prisons and that had all the different letter gradings, they are really a great way to move away from greenwashing to make sure we're protecting ourselves from greenwashing. Because an organization like when we look at Vanguard ESG one, it said it was focused on environmental sustainability and governance. And yes, it is, except that not 100% or not fully, right? So that is greenwashing.
Yeah. Is it, one more question, unless there are any others that pop through, but is it worth it to do just some of your money in ESGs if you're not comfortable doing all of it? I know some people might be nervous to make the switch if they feel comfortable with where their investments currently are allocated and they're just like they've selected a target date fund and they're in it for the long haul. If they're maybe determining that they're comfortable investing 10% of their money in an ESG, is it worth it to do even a small fraction like that?
Yeah, so that makes me think of there's the story of there's 1,000 different starfishes on a beach, right? And there's a kid throwing back the starfish, and someone comes by and asks the starfish and asks the kid, like, why are you doing this? You're not going to have a chance to like save all of these starfish. And the kid replies, but it's important to this starfish,
Oh, I
right?
love that.
Every movement that we're making towards ESG, towards bringing our values into our money, it does make a difference.
Super motivating. I appreciate that. I think I may have cut you off before your very last slide. Did you want to still share that and then I'll wrap up afterwards?
Yeah, I have two more slides I want to share. And thank you, Nikita, for coming on because I can talk about this, as you can tell, for hours.
We all love it. So you're welcome to talk as long as you want.
Yeah, I just want to share two more resources from what I've shared. So as you're thinking about, and we kind of got into some of this in the questions, but where do we start? Right? It's a lot of changes. Money can be a really uncomfortable topic to talk about, although all of you are third decade alumni, so you've done the process of getting informed on this. I want to bring in what James Clear teaches us. He's the author of Atomic Habits. And when it comes to money, it's really much more about habit change. Money is a behavioral question more than a numbers question. It's something that we're doing. We're making decisions about it day in, day out, especially when it comes to spending, right? Banking and investing, maybe you make those decisions once a year, once a quarter, but spending is something we're doing all the time. So, where do we start? I recommend that people start with smaller is better. A smaller goal that you will stick to is better than a big goal that overwhelms you. For example, maybe there's a co op in your city. and you don't shop there because it's kind of pricey, you don't really know some of the brands, you're not really sure, maybe you'll make a commitment to once every 3 months, go to a co-op, right? And see what they have. See what are they promoting. See what small businesses, what small local businesses they may be promoting. So just once in a while going, it's better than not going at all. And it also makes it more sustainable so that you stick to it. Another really key part is accountability. Telling someone that you're going to make a change makes it more likely that you will. I think it's the same when it comes to like if we have a goal and we write it down, I believe we're 42% more likely to reach the goal because just the act of writing it down, of making it concrete, putting it out there in the world makes us want to stick to it. And the third part is to focus on upskilling. And I made up that word to just really focus on learning. As an investment advisor, I'm still learning all of the time, especially when it comes to financial activism. The world can get the tools that financial activists have available to them, especially in investing, can get really complex. So the focus is on what am I learning today? How can I start to, where can I go to really gather information that's going to inform me to make better decisions for the world that I want to create, that I want to see for myself, for anyone who has children, for the generations to come. And I want to share, so I shared some of these resources already, right? So Natural Investments, where I work, Invest Your Values, they're a really great resource. Invest for Better. Again, this is a place where you can go learn about how to invest and how to bring your values into it. And then I also want to point out Jasmine Rashid's book. She wrote the Financial Activist Playbook, 8 Strategies for Everyday People to Reclaim Wealth for Collective Well-Being. And she talks a lot about what I've covered in here today, banking, spending. She also goes into giving. So I highly recommend this book. This could be like a really, for that question earlier of like, how do I start this conversation with friends or family? Maybe you buy this book and you share with them some of the things that you've learned there, right? Starting gentle and being consistent in the change is really what I invite people to. So thanks for participating today.
Thank you so much. I just want to ask, where can people find you if they want to find you or connect to you or listen to your podcast, all of that?
Yeah, definitely. You can go to All the Colors. This is the place, and I'll share my screen again. This is my website, and you can always schedule a heart-centered money call. Those are free 30-minute calls. They're available for everyone. And you can find me also at Natural Investments. Oops. Sorry, I went to the wrong link. So you can find my other bio here where I do my investing work. But I think for All the Colors, you might, again, everybody has access to it. And you can also find a link to my podcast here under Highly Sensitive Money.
And I will personally attest that it's a great body doubling experience to listen to Highly Sensitive Money while you do your dishes at night. I love the podcast, and I think that everybody here would enjoy checking it out too. So really appreciate you spending your time with us tonight, Deanna. And thank you everybody for spending your evening with us too. We will send out a recording of this after the fact, so you can be on the lookout for that if you want to share it with any friends or family. And then if you all want to join us for day 3's webinar tomorrow, we will be doing combining finances and how to navigate money as a team. So again, thank you, Deanna. I appreciate your time and your expertise in sharing it with the Third Decade community.
Thank you.
Have a good night.